Hello, welcome to the CoinDesk webinar on how to tokenize security. The revolution starts now in partnership with StartEngine. I'm your host and moderator for this morning. My name is Peter Ryan. I'm a research analyst with CoinDesk. And I want to discuss what we'll be talking about today. The regulators have spoken. An ICO consisting of the sale of tokenized securities is a legal option for companies raising capital. But how can companies tokenize their securities? And where can investors trade them? In this webinar, learn how blockchain applications such as LDGR can tokenize securities and facilitate investor trading on alternative trading platforms. Discover the future of blockchain finance in a discussion with three industry-leading experts: Howard Marks, CEO at StartEngine, one of the leading ICO platforms; Scott Purcell, CEO at Prime Trust, a bank with technology and services for the crypto community; and Timo Lihes, co-founder and chief investment officer at Swarm Fund, the world's first live security token platform to bridge digital currency and real assets. Welcome all to today's webinar. I'd like to open our discussion with a few facts of our current snapshot of where we are. We have about 1,600 cryptocurrencies out there in the space right now. We have a total cryptocurrency market cap of about 250 billion, and we are now reaching about 20 billion directly raised in ICOs. So the market has grown substantially, and it will continue to grow. And I want to open up into our first question now, directed at Howard. And I want to talk about, why did the SEC declare Ethereum is not a security even though it had an ICO? And how does it affect the other tokens issued from ICOs?
Well, this was, for many people, a big surprise when they made the announcement that Ethereum initially was an ICO and sold as a security, became a utility token. And it seems to make a lot of sense, because in order to properly operate a blockchain, whatever coin you're using, whether in the case of Ethereum it's for gas, can't be a security, because if it was, it would be very difficult to operate. You would have to know who each person is on the blockchain and using it, and you'd have to constantly do checks to make sure they're good actors. And that would create such a huge cost, in addition to what the existing cost was using Ethereum with all the different miners. So I think they took an extraordinary positive position on the matter. And now the question is, how will the other blockchains who have issued securities as tokens become utilities? And the SEC has not really given that much detail. The one thing they made very clear was it had to be decentralized, where there's no one company that controls that token.
Scott, what do you think about that?
Sorry, I was on mute. Yeah, this is basically what they're saying is that in essence, Ethereum is a currency, and currency or not, it's not secure, subject to securities regulations. I mean, at the end of the day, that's really what it comes down to. Whether or not you believe Ethereum or Bitcoin are, an investment / trading thing or a currency is another topic, but they seem to leave that off the table and just felt that it's a currency, which is good, because it bodes well for for all the stable coins that people are creating that are asset backed by USD and euros and things like that, treasuries. So it was an exciting announcement from the SEC.
Yes, and according to our CoinDesk survey from our community, we see that under the question, do you agree with the SEC statement that Ethereum is not a security? we observed that about 86% of our audience agrees that Ethereum is not a security, and they agree with the SEC. Moving on, I want to go to Timo. Under what conditions is a token a security and then no longer a security?
Well, I mean, so just relating back to the Ethereum discussion, I think, I think they set the bar pretty high in terms of the definition of a utility token. And it's just, if you look at the way that Ethereum works today with a very large number of wallets out there, and that the utility is really easy to prove, throughout a very large number of users. And clearly there's product maturity there. And then, the governance model, which is also a non-centralized governance model. I think those factors together kind of was the significant basis of why it became deemed as a utility and not a security. Now, the irony in all of this is that a lot of the securities being built on ERC20 and on top of Ethereum, are securities and will be judged as such, because they might not have the same level of utility or any proof of utility. Some of the ICOs don't even have any product out there yet, so there's clearly no utility to be mentioned around many of the projects. And then as such, I think Ethereum being a utility, that's all great, but most of the projects and tokens that are issued on top of Ethereum are going to be securities, and for a foreseeable time as well, looking forward. So I guess to answer the question, it would be if you don't have as clear definition of utility as Ethereum has, and you haven't met some other of the let's say some of the criteria under the Howey test, for example, such as the expectation of profit from token buyers and things like that, then you may have communicated something about token appreciation value as part of your ICO process. And having done that, a lot of the ICOs that are out there and have been done, let's say over the last 6 to 9 months, are still in the security ballpark.
Howard, and what are your thoughts on that?
Well, I spent some time trying to understand exactly what they were saying, and it seems that the SEC is taking a very, I would say, modern approach to decide that a security is sold as a security, can transform into a non-security under certain conditions. And those conditions seem to be, first of all, that it has to operate and has to work. I mean, that's pretty obvious. So Ethereum is a fully operational blockchain, but it also has to be decentralized. And a lot of the applications that are out there on Ethereum are not decentralized, just for the very fact that Ethereum permits the company to have a trusted source inside of a smart contract. And in the case there is a trusted source, that probably will negate the decentralization idea.
Interesting. And Scott, can you jump in as well?
This is a scary question as to when it's a security or no longer a security, because it's fluid. It's a moving target. The SEC is continuing to get their arms around it and issue guidance. People ask me my opinion all the time. I'm not a lawyer, so I don't give them legal advice. But basically, the safest thing to do is to always consider what token you're offering to be a security, unless a really competent attorney tells you otherwise and is willing to give you a legal opinion on it, so that they're putting their firm at risk if they're wrong. And if you can't get a legal opinion, so basically, that level of insurance, you really don't want to risk the SEC or some state securities regulator walking into your office and unwinding your deal, just as you don't want to risk FinCEN coming into your office because AML is not done correctly and putting you in jail, because that's a criminal violation.
Yeah, and I think the final that I would like to add, Peter, is that on a positive note, I think this was like Howard said, this was a quite surprising but also a very positive signal from the SEC. And, so that there's now kind of language out there that says that even if something is offered initially as a security or in some kind of security offering model, it can transform into utility. However, the bar has been set very high.
Indeed. Yes, and going back to our CoinDesk community survey, under the question, do you think a security token graduating to a utility token with network growth will become more common? We had about 81% of our respondents saying yes, we do think this is going to be more common, of security tokens graduating to the utility token designation. And now moving on, going back to Howard, how can shares in a company become tokenized?
Well, shares clearly are securities. They're offered as equity. They can be offered as a convertible equity instrument, but ultimately they represent the shareholding of the company. And the idea of tokenization is a pretty big one, because if you took a share in the past, it was issued with a stock certificate. It's a beautiful piece of paper. Many of the millennials probably never saw it, but everybody remembers how the railroad companies were issuing these gorgeous securities as wallpaper. Anyway, that has ended recently when you can issue shares as book entry. So in the end, the person who's purchasing, the investor purchasing the shares, will not see a stock certificate, but they will have ownership in a company. That is fundamental. It's a little bit like how e-signatures with DocuSign, for example, have changed the way people sign contracts. So issuing shares in book entry is great, but that doesn't tokenize them. In order to tokenize them, they have to live on some blockchain, and they have to live on some smart contract. So take Ethereum as a great example. A lot of the utility tokens or security tokens were using the ERC20 smart contract. But if you think about tokenizing regular shares, there's something more that needs to be done. You can't just put them in an ERC20 contract and say, oh, well, it can transfer from person A to person B without any restrictions, because that violates security laws. So you need a trusted source, and the trusted source could be the transfer agent. And a transfer agent, in a sense, is a registrar. It will know who owns what in a company, and will track every single share. So in order to tokenize securities, you need a smart contract and you need a trusted source. And I'm proposing that the trusted source be the transfer agent.
Yeah, let me jump in on this question as well. I don't want to step over you, Howard. Were you done?
Yeah, absolutely.
Okay. Interestingly, anyone can tokenize shares they own in any company. It's not unlike people could take their shares to OTC markets and trade them on OTC, even if the company didn't necessarily want to register them. So although you can issue tokens that represent equity at the outset of an offering, conversely, you can own shares in any company. It could be a publicly traded company, like Apple or whatever. Might be a little more regulatory friction there. But let's say you own shares in a Airbnb or any company, small or large. You could take the shares you own, place them with a qualified custodian like Prime Trust, place them with a trustee, create a smart contract around it, which is becoming easier and easier to do, and firms like Polymath and others are doing some great things there. Create a smart contract around it, issue the shares, and you've tokenized the shares of that company that you own, and you could sell them as such. You could sell the tokens that represent those shares. So tokenizing any asset, whether it's real estate, commodities, dollars, currency, or shares of stock, is happening and accelerating, and it's really the future of what we're all doing here, in my opinion.
Yeah, I mean, I can add to that as well. I think it's, this is one of the big areas going forward. And at Swarm, we're heavily focusing on democratizing finance. So that's why we've focused so much on private equity funds and hedge funds and other kind of institutional assets and making them more available to kind of the average buyer of securities. And so when it comes to tokenizing companies and shares, then we have a couple of fund managers and syndicate leaders that are using Swarm to tokenize, effectively bulk positions in large companies and, any kind of company really. But the examples that we've seen that there's been traction for has been like well-known brands and names. And these fund managers have, basically a continuous business where they buy secondaries from shareholders of these companies, obviously within the approval of any ROFRs or other terms that might be out there, and then they effectively either package that into a private equity fund strategy, or in some cases they have used a platform such as Swarm to tokenize those holding entities or special purpose vehicles, like we like to call them. And as such, I think that's an interesting evolution since kind of fast forward a few years, we'll have a market infrastructure by which you can trade these holdings as well. So we think that, the tokenization of shares is a really interesting area, and we see a lot of innovation happening there. And, it's not really a new thing. I mean, like buying secondaries and offering it out on a platform such as Shares Post or Equities, and it's been done for years. I think the really interesting aspect now is that we're building market infrastructure for the tradability of security tokens, which includes, having things like transfer restrictions as well as the right type of buyers in a graph of potential transferees of tokens. That's kind of what we're focused on right now. So we don't necessarily say that the transfer agent is going to solve everything. We've actually built something called Market Access Protocol, where there's a federated model by which you can share graphs of accredited buyers between different constituents, such that you can build like a global network across which these transactions can happen. So that's what we're kind of that's how we view it at Swarm.
Great. And to follow up with you, Timo, can you talk about who are the winners and who are the losers in companies tokenizing their shares?
Yeah, I think that's a really interesting question, because I would say, traditional investment banks, traditional exchanges are probably on the losing side in the short term. Now, there are indications of investment banks being proactive and kind of buying into this market now through acquisitions. So I think end of the day, the kind of the current participants that have a stronghold in the market will also have a stronghold going forward. However, there's pressure coming from the startup innovation side of things, if you will. And we're just looking, maybe jumping forward a little bit, but there's a bunch of ATS license applications in right now, and I think we'll see some shift in terms of, who's going to get what part of the market when it comes to security tokens. I don't think it's going to look in the same way that the market looks today, but we'll have these new entrants that are coming maybe out of the utility token exchange space, maybe some other angle, maybe, somebody that's issuing security tokens such as ourselves or any of the people in that kind of space that will have a stronghold in this market. So it's still to be proven, right? Because it's very early days, but we see that both the incumbents in terms of banks and exchanges, as well as all the new upcomers such as ourselves and Open Finance and all the other guys that are doing interesting things in the ATS space, are going to get try to get a foothold here.
Yeah, I think that the big winners are going to be the investors at large, because most companies are not publicly traded. You have only about under 5,000 companies that are national market securities on the NASDAQ or the New York Stock Exchange. It's about half of what it used to be 20 years ago. And now you have probably around 5 million small businesses in the United States. Imagine if you can tokenize companies and allow the investors to participate in a cost-effective manner, the investor wins. There's so many more investment opportunities that are presented to them that otherwise would not exist.
Yeah, I think that's a huge point, especially from a cross-border. Sorry, go ahead.
Yes, Howard, if you can chime in as well.
Well, what I mentioned was that the investor is going to be the big winner in this whole tokenization of securities. And Timo was mentioning about the cross-border. I would be curious to see what he thinks about it, because obviously the jurisdiction between each country is different.
Yeah, it's pretty complicated when you start looking at like how to define, let's say, what's called accredited investors in the U.S., and then you look at the sophisticated investors or professional investors. They're like different labels for pretty much the same thing around the world with slightly different criteria. But you know, the demand is definitely out there, and I agree with you, Howard, that the investors are definitely winners here, because you have, like, what we're seeing is just spending time in Asia. You see a lot of people, for example, take somebody in Vietnam that has a 35% annual inflation. You know, if they are able to buy into a US dollar denominated asset, being it real estate or something else with solid value and also returns, that's a huge thing. And, you know, if they're able to do that without having millions to invest, then that's even a bigger thing. So that's kind of where we're focused. But, you know, granted, it is a complicated matter because it becomes a question of, you know, obviously in our case, we have the investors from 60 countries on Swarm. So figuring out like which countries are users, which type of investors in which country are allowed to buy what securities. And that's why we need a market infrastructure for this that cannot be based on, you know, people pushing LPA agreements or stock purchase agreements back and forth. This has to be built on technology. And that's why we think, you know, blockchain is a fantastic way of solving some of these challenges. And then obviously, you know, just creating a network that solves this on a global level, we think is the right approach.
Yes, and Timo, do you know how many ATS are licensed, and are any of them using tokenized securities?
So I was at this panel invited by Howard down in LA a few months ago, and I was with a couple of lawyers. One was an ex-SEC person, and she mentioned that there were about 35 or so existing now, and that there was another, 20 or so applications in the pipeline. And she was no longer with the SEC, but that was an estimate that I've heard. So, you know, whether it's 50 to 60, it's just a guess, right? But there's clearly a number of companies now that are going after, you know, the kind of the exchange role and, you know, really see that as a big opportunity. And then, you know, at some point it's going to consolidate, whatever. But I think the innovation is pretty interesting.
Yeah, and this is Howard. StartEngine has also filed an application for an ATS, and we're in the process of that work. And there's a rumor there are dozens of them being filed. I think this is great news because it allows the marketplace to have multiple options for trading tokenized securities. The question is going to be, when is the first one going to go live? There was an article that Coinbase purchased a broker-dealer. And so ATSs, by the way, are broker-dealers, purchased a broker-dealer to get access to also their own ATS. So I think there's no question that the market is recognizing that regulation matters, and they're basically working with all of the existing rules that are written by the SEC.
Yeah, and I'm sorry I can't give like a date as to when the first security token will be traded on an ATS. I think we're getting very close. I think last couple of trips to New York, I've met with a bunch of people there that seem to be pretty close now. I think we're talking maybe a couple of months or maybe even weeks before we see that. So I think it's imminent.
Yes, and moving on, how will ATS trade tokenized securities, and what will the process be like for investors paying for them? Let's go with Howard on that.
Yes, well, an ATS is an alternative trading system. It's part of a broker-dealer. And the way a broker-dealer works is very simple. You come in, you register your account, you provide some information. The broker-dealer will do some checking to make sure this is a good actor and understand what the investors' expectations are and their profile. And then once they're being onboarded and they want to trade, they want to purchase or sell tokenized securities, they're going to be able to do it through the broker-dealer and the ATS, which is the alternative trading system. And the way they're going to pay can be in many different ways. I mean, obviously, dollars still work. That's still the predominant monetary currency being used, but you can also use Bitcoin, Ether, or other, I would say, cryptocurrencies, as Scott Purcell was talking about, and he's very close to this I think area of how people are going to be paying. So Scott, you may want to talk about that.
Yeah, we're deeply involved in this. Remember that if you go buy some stock on NASDAQ, you don't send NASDAQ the money. If you go buy shares of stock on OTC, and OTC is an ATS, you don't send OTC the money. You might buy those shares through a broker-dealer like Keystone, which is the one that Coinbase just bought. Well, Keystone is what's called a nickel BD. They're $5,000 broker-dealer. They're not allowed to touch money. So you don't send that broker your money. You send it to their clearing firm, like Pershing or RBC or someone like that, and to the account there. And that clearing firm is actually the place that the account is held and that executes the transaction. And they execute the transaction through the plumbing of the security system, DTC and SEC, and tying into the transfer agents and everything. So when it comes to how they're going to trade tokenized securities, that's fairly straightforward. They need to create a system where people can offer for sale or offer to purchase and can commit to that. Now, how are they going to pay? That's another problem. So there has to be someone, a financial institution, that raises their hand, or a clearing firm, that raises their hand and says that they're going to do this, and they're going to allow investors to remit payment for something they're buying via check, wire, ACH, Bitcoin, Ethereum, whatever, a stable coin like TrueUSD, and then process that payment and execute the transaction. So there is a lot of work. This is very embryonic. Obviously, I bring this up because we're doing it. As a trust company, we're putting it out there. But APIs have to be built. The whole plumbing to make this work needs to be added. People have to write into each other's technology so that trades can exchange, money can settle, things can clear. It's very embryonic, but it is happening.
Yeah, and if I could add to that as well, I think some of the interesting aspects are when you look at the kind of the previous constituents or participants in that kind of in that market and across that transaction process. Once you build the infrastructure on a blockchain, you know, some of those roles, even if they still exist, might be actually shuffled around and end up in different places than they are today. So, you know, when we look at like how this is going to work going forward, and we kind of look at specifically only on like blockchain or tokenized securities and the transfer of value using, you know, Bitcoin, Ether, or a stable coin like we've supported DAI, which is the MakerDAO guys' stable coin on Swarm, then, you know, that becomes kind of the problem that we're trying to solve predominantly. Just kind of stay in the blockchain implementation of this, because we think that's where the most interesting innovation is going to happen. And then as such, we created something called the SRC20 token standard for security tokens to implement transfer restrictions and stuff like that. And then also the market access protocol to figure out who is allowed to buy what. So I think on kind of on a higher level, we're taking like a kind of global view on how do we design a solution that solves this on a global level. And then you end up with like in terms of like each individual transfer from a, you know, U.S. person to another U.S. person. Well, then it needs to look pretty much like it looks today, maybe with some improvements in terms of the automation that you get through the blockchain implementation. And then when you go cross-border, things get a little bit more complicated, but still, in principle, the same things need to happen. Somebody needs to obviously do the clearing for these transactions. And, so I think there's a lot of new technology that can solve some of these things much more efficient than they're being done today. But at the same time, it's like within each regulatory environment, things kind of are what they are. So especially in the U.S. where I see right now the security token infrastructure is being put in place. And, it's just very clear that there's a number of people who have very good understanding of how it needs to work in the U.S., and they will be the leaders in terms of building the market infrastructure together with us more on the issuance side of things. But I think interoperability is one of the key things here.
Yeah, and StartEngine, by the way, we take a view that's very much simple. We think that the broker-dealer ATS system works great. However, in the past, the settlement of transactions took, T plus 2 days, 3 days, depending on what you're selling. And we believe that with Bitcoin and other cryptocurrencies, you could settle within minutes, which would be a huge improvement to what you see out there. And that's why we built this LDGR or Ledger smart contract technology on Ethereum, is to be able to offer the idea that because you tokenize a security, you can actually trade it instantly or close to instant, and then allow that transaction to happen with partners. Like, for example, what Scott Purcell is doing with Prime Trust will allow the whole transaction of a tokenized security to happen in seconds, which is really the innovation that the blockchain can offer.
Great. And I want to follow back up with Scott. Scott, can someone lose their tokenized securities if they lose their key or get hacked?
Yeah. What can I say? Sure. If you're going to hold your wallet directly and not through a qualified custodian, then you're at risk for something happening. There's lots and lots of examples of people who threw their wallet away, their hard wallet away in the trash accidentally and were digging through a landfill trying to find it. Or who forgot their keys, or who died and then their estate couldn't get their assets. So it's a real problem. There's a lot of innovation to assist with that. There are recoverable hard drives. There are a variety of security features that you can put in where you have multiple keys. But honestly, that's fine for very sophisticated investors and institutions. But your common investor, your standard retail person, it's going to be way out of their depth. And so it just needs to continue getting easier, because the risk, as is proven every week by these hacks on different exchanges, is very, very real.
Yes, and moving on, you mentioned more of the retail investors. I would pose the question now to Howard. What security tokens are available to non-accredited investors in the U.S.?
Well, it turns out that in the past, before the Jobs Act, if you were issuing shares in a private company, they were sold exclusively, pretty much, to accredited investors. These are investors who earn over $200,000 a year and have a foreseeable income of $200,000 in the last 2 years, the next year, or they have $1 million outside of their home and assets. It's a pretty high bar. And that was the world before the Jobs Act. And the Jobs Act introduced 2 new regulations. One of them is called Regulation Crowdfunding, which will allow a company to raise up to $1 million and $1,070,000 per year directly from thousands of investors without tripping the 2,000 investor rule, which would require the company to become a reporting company. And no one wants to do that because those costs are pretty high. And then the other one is Regulation A+, which allows a company to raise up to $50 million a year directly from thousands or tens of thousands of investors. These two rules actually issue the same security that was being issued in the past for accredited investors, but to the ordinary investor, there's no requirement of them to have the kind of wealth. And that, creates a whole new opportunity for tokenized securities, because the ordinary person, and by the way, these are the people who own cryptocurrency. They're not necessarily wealthy from the start, and allows them to actually have those tokenized securities using those two regulations. And the United States has been a huge innovator in this area. And at StartEngine, we've issued over securities for over 150 companies to tens of thousands of investors.
Yeah, I think if I can add to that. Yeah, no, this is a super interesting area, and from the outset, we've always talked about democratization of finance. So, how do you do that if you can only address the accredited investors around the world? So we've been focused on it from day one. It's just that it takes a little bit longer because, there's obviously more preparation and filings required. So the one thing that we've done is that a couple of weeks ago we launched something called a Dash Masternode security token on Swarm, and it was a syndicate manager that basically saw that there was a lot of interest from within the Dash community to run a masternode. But in order to run a masternode, you need to put up $250,000. So that syndicate manager basically said, well, so we're going to do that. We're going to aggregate the capital to run a Dash masternode. I'm going to offer it to retail in the U.S. To start with. So that's the Reg A Plus offering, and we just think that's like Howard said, that was a huge innovation. It's a huge step forward when it comes to retail access to interesting investment opportunities. So we're definitely on board with that, and we just kind of see that as a very, very positive regulatory framework to be kind of in place in parallel with all the Reg D more restrictive stuff that's out there. So very, very useful. We see that the democratization aspect is real, and now we have people able to buy into these kind of investment opportunities with, let's say, $1,000, $500, whatever. That's it's huge.
Yes, and going back to our CoinDesk community survey, when we ask our respondents, are you an accredited investor, only about 16% say that they are. So the vast majority of people that are within the market are unaccredited investors.
Yeah.
Scott, what are your thoughts on this?
Really, this gets this really starts to get complicated in terms of where things go. As Howard said, if securities are issued under Reg A or Reg CF, they're fine for non-accredited investors. For Reg D securities, after Rule 144 comes off, there are limitations as to what non-accredited investors can buy. I think it gets really confusing. All the tokens issued and most of the ICOs prior to now have been done not according to any securities laws, but the SEC has come out and said, yeah, they were all securities. So what does that mean about the holders of them, how they might be traded in the future? It's very messy and very risky. So, where it comes out for the retail investor, it's going to be rough sledding for a little while, risky sledding for a little while.
Yes, indeed. And now going back to Howard, is the SEC going to change the securities rules for tokenized securities to exist?
Well, my opinion is that the rules that we have under the Jobs Act, all those exemptions, Reg D, 506B, A, C, and all the other regulations that are out there as exemptions are pretty good. And they were created recently. Most of them, the Jobs Act was voted in April 2012. So if you think about it, we already have some of the changes we need. The announcement about Ethereum, I think, was very welcome because it shows that without creating any new rules, they're willing to have a different interpretation to allow tokenized securities to become utility tokens under certain conditions. It's not going to apply to most things. And certainly, if a company issues shares as a security, those are going to remain a security for sure. So I don't think they're going to change the rules. I think what they're going to do is offer more guidance.
Got it. And Timo, what are your thoughts on this?
Yeah, I agree. I think there's not a lot of new things coming there. I think most of the frameworks for the U.S. market is in place already, and I think the U.S. is quite far ahead. I don't see that there's a need right now for, in terms of, at least for tokens that are issued clearly as security tokens. And this has been, our point from day one with Swarm, because we always were talking about tokenizing securities, being that a fund position or real estate or some other asset. So we already knew from day one within our project that all the tokens issued through Swarm would be security tokens. So I think for us, we just looked at it as well. We have pretty much the regulatory framework that is needed to do this in place. So, from that point of view, it's been very straightforward to just kind of, let's say, link in our processes with the existing frameworks. And that's a completely separate process from all the ICOs that were done last year and coming into this year as well. Although within that area, we've seen also that the sentiment has shifted, and I'm sure that Howard has seen that as well, that more and more people are taking the view that, we're actually going to sell, a combination of stock and tokens, and the tokens, by the way, are going to be security tokens, so they're going to be offered under one of these exemptions. And that's what we hear out there in the market. And we were always working with securities from day one. So for us, it's been kind of a normal part of life, so to speak. So, and we don't think there's a great need for anything new in terms of securities rules. I think, if anything, long term, I think maybe the international kind of standardization, or just kind of the various differences across countries and jurisdictions are going to be smaller and smaller as time goes forward, because why would you have a restriction within the U.S. for private security for 12 months when it can be offered after 45 days to somebody abroad and things like that?
Yes, and referring back to our CoinDesk community survey, about 88% of our respondents suggest that regulation for tokenized securities are moving in a positive direction. Yes, and so moving on, I want to reference something that you, Scott, said earlier in this chat, where you're talking about stablecoins. And so can you explore more why stablecoins are important for tokenized securities?
Yeah, I think stablecoins are important anyhow. I think, as many people know, I am very negative about Bitcoin and Ethereum and Ripple and things which I personally don't consider to be currency. But I am very, very positive about blockchain. And a stablecoin is a token traded on a blockchain that actually has the value of what it purports to be. And that value is backed by assets held in trust. So the first stablecoin was Tether, and it's very, very popular, but people have slowly begun to come to realize or feel that Tether is just a giant fraud, that people have sent it money, and that money is not sitting in trust. The money's been used to buy private islands and Ferraris and jets and who knows what. A little over $3 billion at this point, I believe. So you have people who are now creating stable coins, notably TrueUSD, which trades as TUSD, that every token is backed by $1 USD held by a third-party trustee that's qualified custodian and subject to audit, not just from regulators, but also from the token issuers' independent auditors that they've hired. So the auditor can check with the trust company, which in this case is us. They can check with the trust company as to how many dollars are held in trust. They can then look and see how many tokens that the issuer has minted and confirm to the market that, yes, one token really is worth $1. There's that sitting in trust. And so people are looking to create stable coins on all kinds of different currencies. They're looking to do it based on other stable risk-free securities like treasuries. And with that, you actually have a tokenization of $1 or a tokenization of a euro or a tokenization of a CNH or whatever. But with that stable coin, you now have something that can be used in commerce. And so somebody that is selling something on their website, they're knitting blankets and selling them. Well, they don't have to just accept credit cards. They can now accept stablecoin because they know that's going to clear through a merchant system and they're going to get $1. They don't have any market risk associated with it. Whereas it's impossible to use Bitcoin or Ripple or Ethereum because the market risk is so high that merchants who have tried to adopt it have lost fortunes doing so. So the stable coins are really what, in my opinion, what rescues commerce in the future of this whole industry.
And Timo, what is your perspective on stable coins?
Yeah, it's a fundamentally important element where I agree on 100% on not only for commerce but also for the Swarm network to have something that is a stable and clearly defined store of value linked to a currency is of huge importance. I mean, when we have people moving in and out of investments, they just need to know that in order for them to be able to stay in some kind of a crypto wallet realm, then all the other currencies out there have not been a good store of value before. And so now we have, and as mentioned, we're working with the MakerDAO guys on, and we've implemented the DAI token because we think that's it's a good team, and we think they're approaching it in a good way in terms of how they think about asset backing of the tokens, etc. And so it's just kind of a fundamental element that's been missing. And that's why that was one of the first things we did on Swarm was to implement the stablecoin. To support the stablecoin, I should say. Yeah.
Yeah, Howard, you could share your thoughts as well.
Well, I agree with Scott that stablecoins are critical to the system. In fact, the ideal would be to have a stable coin that you can use for purchasing tokenized securities easily, clear the trade within seconds, which will allow people to be owners of those tokenized securities instantly, which is what really the market has been asking for. And hopefully with the number of proposals out there for stable coins, some of them will become successful and trustworthy, and I think it's going to make a very positive effect on the marketplace.
Yeah, I agree with Howard. That's a good point. Using them on the exchanges. Binance, for instance, does that on their exchange. They use their stable coin. And other exchanges that we're working with, several of them, are creating or implementing stable coins as well. It really makes the settlement and execution of transactions on an exchange so much easier.
Yes, and with stablecoins, we're talking about how we're packaging these items into tokens. In a similar case, can real estate and funds be tokenized? Are there restrictions for primary and secondary trades? And can we start with Howard on this?
Yeah, it turns out real estate is not a security. So that's great news. So it can be tokenized without being a security and following the security laws, except that if you package several securities into a fund or into a partnership, then it becomes a security. And at that point, each holder of that fund or that trust will own a tokenized security. And at that point, it's very much like owning shares in a company, and it has to go through all of the rules that are being established. So the answer is yes. If you own a home and it has one token for that entire home, then that is not a security. Now, I've talked to some attorneys recently who think there's some Delaware trust formations that allow the trust to not be a security even though you have multiple shareholders. That sounds a very exciting idea. I haven't really looked into it. My view is most real estate, when it's packaged, are going to be considered securities.
Yeah, I agree 100%, Timo here. I mean, that's pretty much what we do, and we do exactly what what Howard said there. There's basically a fund manager that's packaging multiple real estate projects into a fund structure, and then Swarms enables the tokenization of one of those limited partners in a fund, and as such, that's clearly a security. So it just falls into the same framework as everything else. And what we've found is that people, even if it was possible to, let's say, tokenize a piece of real estate and not call it a security, maybe that would be great in some kind of niche use case. But at the same time, when we look at like what investors are looking for, they're looking for real estate as well as other things. So in order for them to be able to move between different types of asset classes, in our view, for the real estate fund to actually be a security is not a problem at all. And that's because we're mostly working with professional GPs and fund managers. And because we do that, it's very clear that, all those real estate tokens on Swarm are securities.
Yeah, what's interesting in this space, we do a lot of work with hundreds and hundreds of real estate companies around the country, is that, as Howard pointed out, it's not a security. And, there may be able to be some Delaware statutory trusts or DSTs or things like that, which can allow some packaging without necessarily becoming a security. It requires a very, very delicate, fine line to be walked there. But what's really cool about tokenizing securities is it allows anyone to sell a piece of their house. So you don't have to go get a loan. And I think that we'll see like these micro lending companies that have come up. I think we will see the same type of thing come into play for tokenized real estate. So someone that we maintain hundreds of bank relationships, but with one of our primary relationships, we're having lunch after Howard's conference in Santa Monica, and she said, "Oh yeah, she's going to sell 10%. She was going to get a loan, but she's going to sell 10% of her house. She's going to tokenize it and sell it instead of getting a loan." And this is somebody who's a senior executive at a bank. So that was really eye-opening. It's going to be a huge new industry, I think, and really, really exciting for the future of real estate and lending.
Yeah, and I want to move on to some of our final questions, and then we'll open it up to the audience. So I want to go to Timo now and ask, why would a private equity fund tokenize a position in their fund?
Yeah, so different reasons depending on what kind of fund it is and what the history is of that fund, and as well as the size of the fund and the composition of its current limited partners. So I think the most common reason is that people want to have a technology platform that aggregates a large number of investors as a source of capital that they don't actually have to directly deal with or administer. So one of the first kind of, from a GP point of view or the fund manager point of view, is just from a practical standpoint, look, we have a minimum ticket size of $1 million or $500K. We don't want to process people that have the smaller investments than that. Can you guys like aggregate this through an SPV and use the technical infrastructure to get that done? Then that's kind of the very practical view from a fund management point of view. And I guess maybe, that might be on the boring side of things, but then there are other people who have more like niche strategies. So they don't typically fit into anywhere in the normal institutional LP landscape, and so they're kind of sitting in with some niche strategy, or they're sitting like we have a couple of fund managers that have tokenized impact funds on Swarm. So, micro lending to farmers in Africa. There's not a typical kind of traditional pension fund or otherwise that would invest in that necessarily. So they find that this is an alternative source of capital that is interested in what they're doing as managers, and therefore they see these as a great alternative to just be out there in the streets, kind of pitching, I guess, family offices and high net worth individuals by themselves. So, I mean, we're building a market infrastructure for this to become accessible to a large number of global investors, and that's what they see as an interesting long-term source of capital, and it's kind of, it provides this infrastructure also subsequently for the trading of those tokens, which is kind of the next aspect that people are interested in as well. So when they can tell their LPs that, if you use the tokenized infrastructure, then you can also get liquidity that is, outside of the liquidity which is provided by the fund manager. So, and that's also a big item for a lot of the investors to say, look, I don't want to be locked up for 8-10 years. If I can have partial liquidity from my investments in your fund, then that's a very strong point for the investor to come in with maybe a larger amount or even come in at all into that fund compared to if they didn't provide that capability. So we see that there's a lot of interest from the GP side. We're almost a little bit overwhelmed by the level of interest from the fund manager side into like tokenizing at least one of their LP positions, if not the whole fund. But in most cases, the funds that have used Swarm to tokenize an LP, many of them have multiple other LPs already that are, let's say, traditional investors. So we just provide that kind of conduit to an additional investor base, and then also to the market infrastructure for the future to provide liquidity.
Great. Now we're going to open it up to some questions submitted by our audience. And I'm going to direct the first one at Howard from Doug, who says, what is the thought process of identifying advantages and disadvantages when deciding what blockchain to build your security token on?
Well, my opinion is that there are many different blockchains. We chose to use Ethereum because it has a lot of developers around it, a lot of interesting new additions that will be helping Ethereum become more scalable. So we created Ledger LDGR as a smart contract on Ethereum. The main advantage of using that blockchain was there are a lot of people who know how to develop for it. There's a lot of information out there. There's a lot of support for the community to help us build it. And it was pretty quick to do. And so we're nearly ready to release it to the marketplace. And it's going to be very inexpensive to use because we don't need a lot of gas for that smart contract. So it has a big advantage. And the main reason we're able to do it so cost effectively is because we're using it as a trusted source, or the Oracle in some cases, the registered transfer agent, which will have all the detailed information about each shareholder.
Great. And now I want to direct this next question submitted by David to Scott. And David says, if regulation would come to tokens, what kind of reporting and auditing would you see the FRB, SEC, CTSC requiring? Thank you.
Tokens, a security token is a security. It doesn't matter whether it's a stock, bond, or a token. The only one that really matters to is FinCEN. FinCEN has put some additional requirements on token issuers that they don't necessarily put on people issuing stocks or bonds. So it's the securities regulations that define the reporting. So if you're issuing tokens in a Reg D offering, you're going to need to file your Form D with the SEC and with every state you've sold securities in. If you are doing a Reg A, then you need to go get qualified with the SEC before you do that, and then you have your ongoing reporting requirements. Same thing for a crowdfunding offering. If you're using StartEngine to raise $1 million in a Reg CF offering, you have to file your Form CF, you have to file all kinds of amendments and then annual statements. So the reporting that is typically required for tokens is it's a security. So whatever token reporting is required for stocks and bonds, it's required for tokens.
Got it. And this next question will be for Timo, coming from Brad, saying, what are the options for liquidity, i.e. future resale of tokenized securities?
Well, right now there are very few. I mean, there's basically your own kind of OTC or private sale mechanism, and it comes back to the, let's say, the early days of the whole ATS infrastructure when it comes to security tokens not being kind of mature or even live yet. So in the short term, you have very few options to get liquidity. You basically have to find a buyer pretty much by yourself or through a broker. And so, however, fast forward a few months, I think we'll see, if not, 2 or 3, I would hope at least within the U.S., functioning ATSs that are trading security tokens. And, through those channels, you'll be able to start seeing, getting access to liquidity sources that haven't been, I suppose, as available or as kind of automated before. So I would say by the end of the year, we should see kind of a glimpse of what the future will look like when it comes to liquidity for security tokens.
Great. And now we are at about noon, and that concludes our discussion for today. I'd like to ask each of our panelists to please tell the audience more about your companies and how they can find you and learn more. Let's start with Howard.
Yes, thank you, Peter. Thank you. I'm Howard Martin, the CEO of StartEngine, and StartEngine at StartEngine.com, or contact at StartEngine. We our mission to help by helping them reach their capital need, helping we building so fortunate to be able to help for 150 companies raise their capital and help 100 more this year. With the advent of blockchain technology and all of the cryptocurrencies, we see the major future for investors and issuers as to build access to capital and trade their liquidity for their purchases. In a way, we're recreating in the stock market what progress was dozens of years ago, where you could have any company go public and act on the capital market. And with our technology called StartEngine, we're going to be tokenizing all those shares issued under the Troll Stack. And we're really excited about the prospects of helping hundreds of more companies issue shares using an IPO or through crowdfunding.
Thanks, Howard. You're coming in a little unclear there. There's a little static on the line. So to just reiterate a little bit for those that didn't hear in the audience, StartEngine is a modern financial firm that enables companies to launch regulated ICOs with the help of LDGR, a patent-pending decentralized blockchain application that tokenizes securities. And so I'll move on now to Scott. Can you please help people where they can learn more?
Yeah, Prime Trust, easy, just go online, www.primetrust.com. We are a retail trust company that is technology driven. I like to say that we're a financial institution second, we're a technology company first, and we are really built to serve this market, and we're rolling out a variety of services. We've been handling escrow work for crowdfunding and all types of securities offerings for years, and we're now offering Bitcoin as a payment mechanism. Ethereum will be a couple of weeks out, and we expect next week to announce that we're the first people stepping up to actually act in this industry as a qualified custodian, a regulated financial institution that is authorized to hold assets on behalf of customers. And we will be holding all forms of tokens.
Wonderful. And Timo, if you could conclude with us.
Yeah, sure. So, Swarm.fund, or even better, invest.swarm.fund is where you can access the investment opportunities on Swarm. And what you will find is institutional quality investment opportunities and also some impact investments that are generally unavailable to accredited or retail investors. And so that's kind of the innovation behind Swarm. And as such, we are also the first live security token blockchain. And so we launched in January, and we have 30,000 investors from 60 countries on Swarm. And so I think, just go there, check it out, see what you think, and you can participate on many levels as a fund manager. You can tokenize your LP offering as an investor. You can kind of use your existing crypto currencies to invest in these opportunities, given that you meet the criteria required for the country that you live in. And so, yeah, check it out. We're adding new investment opportunities on a weekly basis. So stay tuned.
Great. Well, thank you to everyone in our audience as well for joining us. This was How to Tokenize Securities. The revolution starts now, partnered with StartEngine and CoinDesk. And I was your host, Peter Ryan from CoinDesk. Please look into all our great news articles and our long-form reports on the industry, where you can find information like our CoinDesk community survey that will be published in our latest Q2 State of Blockchain report. You can follow the latest and greatest insights at CoinDesk on Twitter or at my handle @_Peter Ryan. So once again, thank you to our panelists for joining us, and thank you to the audience. Hope you all have a good day.
Thank you.